Amazon's call is now underway. We will keep you abreast of what they're saying about Bezos stepping down as CEO as we get it. Meantime, it is time for a Trader Triple Play. The three big stock moves on our radar today. Let's kick things off with Alibaba reporting better than expected earnings. Sales surged last quarter and its cloud division turned a profit for the first time ever. It wasn't, though, enough to help the stock. Baba closing lower today. Tim, there were some concerning comments or maybe some very serious comments about the future of Ant Financial, for instance. What did you make of the whole thing?
Well, as we've talked about on it, as far as Ant Financial and the valuation implied in Alibaba right now, it's not in the price. I think it's optionality, and I don't think it should be. I think there is intrinsic value there, but I think there's been a misunderstanding of the regulatory dynamics in China. And while Jack Ma at times certainly has put pressure on himself, I think the things that Alibaba are suffering from in terms of regulatory headwinds will work themselves out, and that the regulator needs to do what they're doing. The story today on earnings was, look, great that the cloud business is growing. There definitely was some margin pressure. It's interesting that their other bets part of the revenue stream is something that also was a bit of a disappointment and a little bit more important there. But a name I'm long, look, you've gotten back up to this 255, 260 area. There is a little bit of short-term resistance, but I think this is all about perception on the stock and a discount that's been put on it based upon, I think, more sovereign risk than anything else.
All right, let's move on to Exxon, the oil giant, reporting a $20 billion loss last quarter, its fourth straight quarterly loss. But the company was able to beat on the bottom line. Shares moving higher on the day. They did come out and very strongly reaffirmed its commitment to the dividend, saying that if it had ever gotten into the situation where oil moved back down to $45 a barrel, it would defend the dividend and cut spending. Guy, what's your take? Is that the kind of oil company you want to be in? If at all.
I don't think so. I don't know why they need to. I don't know why they need to make comments like that. And do you need to be in it? Needed to be in it back in October, November when we were talking about it. And we said a long time that 31 low was a huge double bottom, gave you huge opportunity to the upside when nobody's paying attention. And then you had Exxon taken out of, I believe it was the Dow, if memory serves, and that actually sell-off lasted a day. Look where it just traded up to. You talk about a huge double bottom. Now you have a pretty huge double top in the form of 50 and change, which is where we topped out at back in June. I think this stock heads back to the high 30s, low 40s, and I don't really necessarily need Exxon telling me that they will defend it in an environment where oil goes lower. I don't think, into 2021, I don't think that's the rhetoric, not the rhetoric. I don't think those are the statements we need to hear.
All right, let's round out the triple play with UPS. The stock is higher on an earnings beat, revenues jumping to a record high. Our own Jim Cramer just sat down with UPS CEO Carol Tomé. Here's what she had to say.
For the first time in a long time, our revenue grew faster than our volume. That's what we mean when we say better, not bigger. And we were able to do that while delivering excellent service in this holiday peak time. And I was really happy with the productivity that we showed on the bottom line. So we are positioning this company for some really great things.
Full interview is next on Mad Money, top of the hour. Meantime, Bonawyn, what did you make of the move?
Listen, I think it was generally a strong quarter, but this name has been trading sideways, I think, since, July or August, maybe September, at the latest. And I love the story, right? And she points out that, listen, essentially revenue has outgrown volume or has grown at a greater rate than volume. But my question is, what is the next thing that takes this leg forward? We've spoken about the B2B versus C2C margin of the business there. We've talked about the tailwinds of having COVID. For me, I'm just still scratching my head in terms of what is going to be the thing that takes this thing to the next leg higher and breaks through resistance levels that we've seen over the last 6 months or so.
Shepard Smith here. Thanks for watching CNBC on YouTube.